All right, guys, we got a market recap, trade recap today for Monday, August 3rd. First trade recap in about a month. This is the first trade that I've taken in about a month. And this was the first morning, really, in three three weeks or so that I actually logged on to the charts for market open and was actively looking for a trade. So as you can see, back on a 50K eval after taking this time off, and I decided to scale down a little bit after taking this step back uh, because of the heightened emotions that I had before taking this time off. And so I want to just solely focus on the candlesticks and the charts and what they are telling me. And I know that if I do that, that I have this skill. Um, Nobody can take this skill away from me. And I know that if I have this skill, the money is going to come as a byproduct. As long as I'm detached from the dollar amount and the emotions, I know that I am a very successful, profitable trader. And so the dollar amount is going to come as a byproduct of me solely focusing on what the candlesticks are telling me and executing based on the candlesticks. Because I have the skill of reading price action and being able to determine when and where the market wants to go and when it wants to do so. Because I've sat here and I've seen these patterns play out and these candles form for over 2.5, almost 3 years now. Um, every single day, New York market open, I have seen this stuff play out. And it's to the point now where even if I'm not consciously thinking about it, my mind and subconsciously is picking up on these things. And it's literally flow state. There's a reason this channel is named Flow State Trades. It's literally flow state like as long as my emotions aren't taking over and aren't compromising the skill that I have, which that's easier said than done. And these prop firms are designed to evoke those emotions and bring them out of you. And trading is designed to evoke those emotions and alter the way that you're executing on the charts. But if you can have a sense of clarity, and if you can kind of sit on top of a hill and look at it from a third person perspective without emotions, that's when things truly start to open up. And I know this is just an eval, but this was the most emotionless trade that I've had in quite some time. Truly, in quite some time, this is the most emotionless trade that I can remember having. Um, and before taking this break, I was the most emotional on evals, and there's so many different factors that led up to that point and to me just being incredibly emotional trading an eval, which that shouldn't be happening. Um, but I was even more emotional trading evals than I was on express funded accounts. Um, so that's why I decided to take a step back and to take some time off. This is the first time I've willingly took more than a day off in my over 3 years of trading. Like if it's not a bank holiday, if the market was closed, like this is the first time I have willingly took a step back when the market is open for more than, I don't even know if I did that for a day, bro. Like, but it's given me a sense of peace. And honestly, during this time away, I've considered if trading is truly for me and if it's truly what I'm meant to be doing. Um, for the longest time, I've felt a calling to do this, and for the first time, I would say I've truly been reflecting on, okay, is this actually for me? Which is crazy because I never thought I would be having that conversation with myself after getting payouts after making back all of my losses from trading, after having the most success that I've ever had. But it got to a point where I was so emotional, and I'm just like, is it worth all this stress every single morning coming into the market open? Is this really what I want my life to look like? And that's a conversation that I'm still having with myself. But I think today was proof that it's a step in the right direction, because like I said, this was the most emotionless trade that I've had in a very long time. Um, and so that's a bit of a 5 minute yap session to get into this trade recap. But I feel like it was needed because of the time away. And so yeah, getting into this trade here, um, I posted my bias this morning in the Discord. This is what we look like coming into the market open. High time frame wise, it made sense. Let's just zoom out here. What is the number one priority when you are trading in the market is the high time frames. What's the high time frame structure look like? What do the high time frames want to do? Because if you're not aligned with the higher time frames, the lower time frames don't mean anything, right? The lower time frames are literally just noise. You can see I have this huge text, high time frame market structure. What are we doing on the high time frames? Well, the summer months have been pretty choppy. June, July, we've been pretty choppy up here, and we decided to finally get a decent sell-off, and we have rebalanced to this monthly fair value gap. So this is high time frame wise, this is the decision. What are we going to do from this monthly fair value gap? Well, the past couple days we've gotten a sharp buy up out of this monthly fair value gap. So where is the next logical place for the high time frames to go after this increase in volume reaction out of this monthly fair value gap? Really, I only see one area in price, and that's this daily fair value gap right here. And that was my target for this morning. It's like, okay, if we're going to go back to, let's say, all-time highs, what's the first destination? It's just this bearish imbalance, because whether it's just a retracement or whether we end up running through it and going back to all-time highs on NQ, this is still going to be the first target. And this is what made sense high time frame wise. It makes sense to at least get a rebalance to this daily fair value gap, even if we're going to dig deeper eventually further into this monthly fair value gap. So that was my target, was this daily buy side, this daily imbalance. And then overnight, zooming in a little bit, we can see that the 4-hour chart is displaying that displacement higher, and we have flipped bullish on the 4-hour time frame, and on the hourly time frame, market structure is bullish. So high time frame wise, I'm playing a retracement to this daily fair value gap. That's confirmed by the 4-hour structure and the 1-hour structure, which have flipped bullish into that direction. So we have a good draw on liquidity, and the 4-hour, 1-hour, higher time frame, hourly charts are confirming that draw on liquidity for a retracement. So overnight structure forms. I know that we've flipped bullish. I kind of want to be bullish until we reach this daily fair value gap. Overnight structure forms, and we open up a new week opening gap on NQ. What do? We eventually trade down and fully fill this new week opening gap. And you can think of this as it's literally the new week opening gap is this is basically, you can think of this as a big 1-hour fair value gap as well. It's just a big fair value gap. We've already completely filled the new week opening gap once before the market opens. And so at this point in time, now I'm going to get into the bias. This is what we look like before the market open. And I said, NQ has fully filled its new week opening gap. The 1-hour, 4-hour structure tell me it would make sense to go tap that daily civvy. And we also have buy-side liquidity stacked up, low resistance liquidity in the direction of this daily fair value gap. However, if the bullish bias is completely wrong, I said there was potential, there's a prominent swing low, but this is my main draw on liquidity, my main bias for the morning. And then this was just a another zoomed in picture of the 15-minute time frame. This would be a textbook market maker buy model. In context, it aligns also with the higher time frames and my higher time frame bias. So everything is pointing me to this direction. And it's confirmed, or I have a trade confirmation in the fact that we have this internal buy model which aligns with that higher time frame bias and that higher time frame draw on liquidity. And so literally this was exactly what I wanted to see when the market opens. The first 15-minute candle opens, we get an initial sell-off here. All this is an internal sweep on liquidity. Manipulation at the lows. We sweep the lows. We re-sweep the lows once the market opens, and then we displace higher. And this displacement higher, this market structure shift, and the direction of the model, the market maker buy model, is then confirmed after this market structure shift, after this displacement higher, and it's also in direction of my overall drawn liquidity, which is this daily fair value gap. And then also we have these stacked highs. It just makes complete sense, and this is exactly what I wanted to see. And so in this context, it makes sense to enter off of a strong 5-minute, 15-minute, 1-hour candle close because it's in the context of the higher time frames and it's fully aligned and it makes sense with the higher time frame bias. I think one of the things that I started to stray away from in my trading was getting too aggressive and just taking any 5-minute candle that looked good. When in reality, it's not the 5-minute candle close that I'm taking the trade off of. It's the 5-minute, 15-minute candle closes within the context of the higher time frames. This is within the context of this market maker buy model. This is why all the context surrounding it is why I have confidence in placing a limit order once this 15-minute candle closes. It's also the hourly candle close and it's the 5-minute candle close. But it's not because of the 5-minute candle. It's because of the context surrounding it. This was just the final piece of the puzzle for me to say, okay, I have confirmation we're going higher. Let me just get into the trade. I don't want to be too cute. You can wait for a pullback to a fair value gap. We technically do get it. And you can just simply enter on this fair value gap, right? You can get cute with it and zoom into the 1-minute time frame. And you can be like, you can have all this marked out, market structure shift here above these swing highs. We can annotate this out and get really cute. Market structure shift, pull back to a fair value gap. You can have your limit order at the fair value gap. And then we hold the fair value gap and we continue higher. And this is your buy model. For me personally, like that's completely fine, and that's literally how I used to trade. That's how the market moves. Me personally, or especially being on an eval, I don't want to get too cute with it. Yes, we do eventually come down and tap this 1-minute gap, and had I been looking for a better RR on the trade, maybe I would have done so. It also made sense. I had equilibrium marked out, so I wanted to make sure my stop loss was below equilibrium, but also realizing, hey, we've also already had this initial pump, rebalance, held this 1-minute gap and continued higher. So this is now the new protected low. That's where my stop loss needs to be. And so I have a safe stop loss below that protected low. After this displacement, we should not come back down and take this low. So I just want to get filled on this trade. I have a safe stop loss and I have a risk reward that I'm content with. I don't need a crazy risk reward because the way that I'm trading these evals and the way that it's most efficient for me to trade evals, I feel like, is to risk the full drawdown and go for all I need is a negative RR trade. So a 0.75 RR to half pass this in 2 days. Half pass and to get that $1,500 mark in 2 trading days. So literally my take profit was a little bit before this initial buy side liquidity, before this initial model, which is fine. That's just how my risk to reward, it's all about risk management. the risk management is going to be slightly different on evals compared to XFAs. That's just how it is. That's just how prop firms work. But I understand that, and so I understand as long as I have a safe stop loss, my entry can be a little higher up into the range because I kind of just want to get filled and I don't want to miss out on the move, and it makes sense. Now, you could have waited for a deeper pullback, and had I done so, I still need that safe stop loss below this protected low, but my take profit could have just been holding until this daily fair value gap and until this last buy side liquidity within the daily fair value gap. And you can see it all gets taken. The take profit is just going to be a little bit different because of the risk management, because I'm on an eval. So my TP was down here literally for a negative RR because that's all I need for this eval because I don't want to make more than $1,500 in this one trading day. But either way, your risk management might slightly be different based on if you're on an XFA or if you're on an eval, but the trade doesn't change. The trade and the market structure and the way that you view the charts and your stop loss should not change. The only thing that should change is the amount of contracts that you're putting on the table. And then if you're trading an eval and you have the risk management plan like me, sometimes you're fortunate enough to where you can have your take profit before the buy side liquidity, before your drawn liquidity actually gets taken. So that's the trade. Literally incredibly textbook. And you can see what gives me confirmation, what has given me confirmation in the past are these higher time frame candle closes because it kind of blocks out the noise. But even if you don't want to do that, right? We have our manipulation at the lows. We have this market maker buy model. We have the market structure shift. We have the generated buy side liquidity up here. So like I said, we have the market structure shift. We have a pullback to our fair value gap. We hold this fair value gap. We have a protected low where our stop loss is. Like this is a textbook market maker buy model. Market maker models are how the market moves. And lately, in the past, I haven't really been annotating the market maker models in these trade recaps because I've been trying to dumb it down for myself and keep it as simple as possible. But this is truly how my mind works and how I view the markets and how I get my bias every single day, and it's what makes the most sense to me. Market maker models are how the market moves. It's how the market moves. It just is. It just is. And it's poetry and it's art. This is an art form. Okay, this is so satisfying. It's just so satisfying when it plays out. So yeah, man. Whether you want to annotate all these things that are happening, whether it doesn't matter if you annotate all of this stuff. I can see it happening in live time. I can see a sell off, wick out this internal low, displays higher, the 5-minute, 15-minute candle, 1-hour candle close. You're not always going to get an hourly candle close, but look at this hourly candle. This displacement confirms the market maker model that we are ready to go and we are ready to move. So what do I need in order to get a good entry? A rebalance to an inefficiency in price. What does the market move? To rebalance to inefficiencies, to hunt liquidity, to rebalance to equilibrium, and to generate liquidity. Those are the 4 reasons why the market moves. I'm kind of getting nostalgic saying that because I used to say that in all my old trade recaps, but that's why the market moves. Why did the market move today? To fill an inefficiency, which was this new week opening gap. We manipulated price. We hunted liquidity. We took liquidity here. On the way down to fill this new week opening gap, what did we do? We generated all of these internal highs. What gives me confidence that we're going to go take all this generated liquidity, this displacement, market structure shift, confirming the move higher? What do we then do after this displacement? We rebalance to an inefficiency again. Because why? That's why the market moves. Come down, fill more orders. You can see this displacement and this fair value gap opening up. There tells me there's a lot of buying pressure. There's a lot of orders that are coming into the market. What do? Rebalance back down to that inefficiency, fill some more orders. And what do we expect out of that? Because of the higher time frame context around the trade, we expect this fair value gap and this inefficiency to hold and to go take and go hunt the higher time frame draws on liquidity. This is also a high time frame inefficiency in price. The market is constantly hunting liquidity, generating liquidity, rebalancing to inefficiencies in price, or rebalancing to equilibrium. It's that simple. It's that simple. Once you understand why the market moves, the world is your oyster, the charts are your oyster, and once you understand how the market truly moves, it's solely going to be up to you and how well you control your emotions, which is going to determine how successful of a trader you are and how much money you ultimately end up making. So, this is a very long video, 21 minutes. If you're watching all the way through, I appreciate you. Don't know how much views these initial videos are going to get because having taken a month off of making videos, but you can probably tell, and I think I just proved to myself, like, there's no other topic in life that I can yap and rant about for 21 minutes straight and not even think about it. My mind is just going. My mind, like, this is what I love to do. And so maybe this was the answer that I needed. Not to overreact from a taking one win on an eval, but like, truly, like I said, I've been reflecting. There's nothing else. There's no other topic that I could yap for 21 minutes straight and feel like I'm not even having to work to try to come up with things because it's just flowing. I'm in flow state literally recording this video, and I put so much time and so much investment into this skill that I now have that it's subconscious. And like I said, the biggest thing is just letting that subconscious and the years of experience, just letting that take over and guide my decisions within the marketplace. And the way that happens is to be content with where I'm at financially, where I'm at emotionally, where I'm at in life, and have the confidence that God's got me. I'm exactly where I need to be, and I'm going to get to exactly where I need to go. He has a plan for me. Me coming into the charts in the morning trying to force things to happen and trying to rush a timeline that I have set in my head is only going to do me more harm than good. I think that's another thing that led me to become more emotional as I started to get payouts and I started to realize, wow, after all these years, this is real. I can make money from trading, from my computer. I can make money from my computer screen. And I started to compare myself to some other big traders in the space who are pulling 20, 30, 40, 50K months. And it's like, wow, I can do that too. I can do that too because I've proven to myself that, hey, I can start making money from trading. And so I think I also started to force the timeline a little bit. And it was hard for me to come into the market, especially being on an eval, and just not take a trade and be content with not taking a trade because I have all these monetary goals. I'm starting to compare myself to other people, and ultimately that was a detriment to my own trading. And so just take that as a lesson of advice. Anytime you start to compare yourself to other people, like literally nobody else, the only thing that matters is you and your trading journey and where you are at. Nobody else's progress matters. It doesn't matter. Nobody else's progress matters except for yourself. You're the only thing that matters because it's your life. It's your trading journey. It's your career. You are trying to provide for yourself. Who cares if someone is making X amount of dollars and then like congrats to them. And you know what? Maybe one day you'll get there, but you're only going to get to that point if you're content with where you are right now. Um, so yeah, just realize that nobody else's journey matters except for yourself. My journey doesn't even matter. You're watching this video right now. My journey, where I'm at in my trading career, does not matter. Like, I hope that these videos offer some sort of value and they can help you and help you become a better trader and help you understand the charts. But monetarily, like the dollar amount, it doesn't matter how much money I'm making. It doesn't matter how much money this other person is making that I might see on social media. Comparison is literally the thief of all joy. And there's this one quote. It's actually my Twitter banner on Twitter. I think my Twitter is linked in the description if you want to go follow it. But it says the fastest way to kill something special is to compare it to something else. And that's so true, bro. That's the truest quote I've ever seen. The root of all anxiety comes from comparison and feeling like you're not where you are supposed to be right now because you're comparing yourself to other people. And that's also a big root of emotions in trading, especially nowadays with social media. Um, so just take a step back, man, and reflect on yourself. What's actually causing these emotions? And just realize that ultimately your journey and like you are the only thing that matters in your trading journey. You're the only thing that you can control. So just control what you can control, and the odds are going to play out in your favor in the long run if you have a profitable strategy. And I know that I do, and I have proven profitable results. And so the only thing that I can do is to control my actions on a day-to-day basis and solely just execute on what the candlesticks are telling me. So this video is already too long, 27 minutes. But yeah, that's the trade recap for today. Back to making videos. It was a good start to the week on Monday. I was honestly considering coming back last week. But last week, if we look, or it was actually, maybe it was 2 weeks ago, I was considering coming back this week on the week of July 20th, but there was literally no news all week, and it was midsummer, and the market was still chopping, so there was no reason to do that. And then this past week, I was actually just really busy with a lot of other things going on in my life, and I was kind of sick, so ended up just taking last week off as well. And we're back this week. We have good news every single day this week, and it looks like we're, at least for the time being, we are out of this daily consolidation. We'll see what happens from here. But yeah, man. So not gonna make this video any longer than it already is. But that's a trade recap. It feels good to be back, and I feel like I have a good mindset and a good headspace on me right now. And so yeah, just the goal is to just keep that going and realizing that I have this skill and everything is going to come as a byproduct. Being back on one account is also helping with that emotional aspect as well. And hopefully, and one account is all I need right now. One account is all I need right now. There's no reason to force things, to force myself to scale up if mentally I might not have been completely ready for it, and that's okay. So hopefully I'm able to get my confidence back on this, and realizing that in the long run the monetary value is going to come as a byproduct because I have this skill. So that's the trade recap. Feels good to be back making videos, and yeah, man. If I don't know if anyone's watching 29 minutes into this video, but I appreciate you watching, man. And I hope to see you throughout the rest of the week for daily market recaps. All right, peace.